Hey everyone, welcome back to Reimagine 2020 V4, our fourth event. I'm Roshan Mirajkar, one of your hosts for the event, and I'm from MouseBelt. I'm very excited to be joined here by Josh Frank, a returning guest from the Thai. Josh, thank you so much for being here today. Give you a second to introduce yourself.
Yeah, thanks for having me. Well, before we get started, this is supposed to be Halloween, and I realized that about a minute before, even though I previously promised I wear an outfit, but I got out some Bitcoin pants. So check out this swag, pretty cool. Bet you guys don't have any Bitcoin pants, but I got to ask you, what is the costume that you're rocking? Are you like a sailor astronaut? I'm very confused.
Yeah, so I'm a sailor astronaut because, it's crypto. I'm trying to go to the moon and I'm trying to like ship things, like the devs do it. So I'm a combination of
Wow,
both.
that's
I
so
like
cheesy. That's
I,
so
I,
cheesy.
I like your Bitcoin pants, but you got to get some DeFi pants. I heard like DeFi, and so
I'm looking
what's
for
going?
shitcoin pants. I'm looking. I want all the different shit coins on my pants.
I think those might be a little more easier to find. You can just pick them up
I have
wherever.
Ripple socks actually. I was given them as a gift, so I mean, I guess that would go with my flow.
Wow, Ripple
Not
and Bitcoin.
XRP. These are Ripple socks. This is the old
Okay,
Ripple
not
logo.
not
This is
X.
before they rebranded. Yeah, this was a long time ago. This is
Not
like 3 years
XRP.
ago.
Okay,
Not XRP.
thank you for clarifying that for viewers out there because there is a difference. That's the running theme in crypto. There's a strict
Oh no, well
fine
this
line
was
between
when
things.
this was when Ripple when XRP when Ripple released Ripple before they renamed it XRP. No, this was the token, but when it was called Ripple back in the day. eToro still shouts to eToro. They also they still call it Ripple on their websites. They haven't even changed it to XRP in 3.5 years since they renamed.
So you've definitely been in crypto for a while, knowing
Unfortunately.
all this stuff, unfortunately. But what's going on since the last time we spoke to you, couple of events ago? I know the Thai is bringing together a lot of the data out in the space. The space is so hard to understand for the average person. You can be on Twitter, or you can read just simple metrics for certain things, but I don't think it's all encompassing. So I really like how the Thai encompasses a lot of things. But yeah, what have you seen in this whole DeFi craze, and how have things been from your side for all the data you're seeing?
Yeah, I mean, in terms of DeFi, I have differing perspectives than a lot of others in the industry. I think a lot of what's going on with DeFi is certainly very interesting. I think the BitMEX news really concerns me for DeFi, even though people aren't talking about it. The fact that founders of BitMEX were indicted for violating the Bank Secrecy Act, not properly doing KYC on their users. And I think the founders of all of these DeFi protocols and these exchanges that have US based customers that aren't properly doing KYC are going to be in a lot of trouble. I don't know what that means for the exchanges themselves. I'm also not a lawyer, so my opinion is probably irrelevant, but just my opinion. In terms of what we're seeing, I mean, we're seeing this, continued massive interest in DeFi. I think most of it is contained to the existing crypto ecosystem still. It's not like, I think PayPal coming into the space is going to bring a tremendous number of users into Bitcoin. I think that, like Franklin Templeton investing in Curve is another example of things that will bring in traditional institutional investors and asset managers. I don't think that DeFi is there yet. I think there's certainly lots of interesting things going on, but I think there's still a lot of concerns about, how does DeFi interact with regulation and law, and how much smart contract risk still exists out there. And we've seen, with a lot of these projects where the founder just exit scams or rug pulls, right? And how do we account for that? So look, I think DeFi is certainly interesting. I think that AMMs are interesting, and a lot of the new innovation that's happening in the space is interesting. I think we will see a shift in a lot of traditional financial services moving to DeFi. It may not be a huge number of people, but I think a number of people. But to me, it smells a little bit like these cycles that we constantly have in crypto, these hype cycles, right? Where ICOs were first thing, it was Bitcoin is money, right? And Roger Ver ran around to every single store and tried to convince them to accept crypto, right? And to accept Bitcoin at that point as money, right? So first thing, it was Bitcoin's money. Then it was like, okay, actually Bitcoin doesn't work as money because Bitcoin's not scalable. Then we had this giant ICO boom and bust, right? And everybody ran into ICOs. Then we had, and the ICO boom skyrocketed Ethereum because all these tokens, raised in ETH. So everybody had to go buy ETH, and the ETH price ran up like crazy. It went up to like almost $2,000 and it crashed. And then we had, the IEO bubble, which crashed. And what happened to IEOs? I don't know. Like, Binance Launchpad launches something every once in a while, but it's basically gone. Then we had like this NFT thing a little bit, then it disappeared. Now it's back. We've had DeFi before. And look, it's certainly a tremendous amount of money that's flowing into the space. It's a lot of VC money. But I still have some concerns. So I don't know if that answered your question, but.
Yeah, no, it definitely did, because I think since the last time we spoke to you, there's been a lot more institutional interest, right? MicroStrategy, companies like
On the
Square.
Bitcoin side, though, that's a big.
You're right, on the Bitcoin side.
Asterisk. It's on the Bitcoin side, and I think we'll continue to see that. I think. No, finish your question though before I go.
Oh yeah, no, I was just going to ask you, how do you think some of these companies evaluate kind of the value and the metrics as far as when is the right time to buy for them? What do you think, because I know a lot of institutions, you have some institutions that you work with. So what do you see them mostly interested in? And I know you're going to give a short presentation on what actually moves the market, but how do you think they're thinking? Any perspectives there? Because it might be a little different than
I think the really cool thing about Bitcoin is it can be so many things to so many different people. And we've seen that. Michael Saylor and MicroStrategy are looking at Bitcoin as a hedging asset, right? And I think that goes the same way with a lot of the other people that are going down the treasury route. But you see others like PayPal apparently exploring the acquisition of BitGo. Well, that's actually quite interesting because they're a custodian that's moving into prime brokerage. And originally I thought, oh, maybe this was just Bitcoin, but now it seems like it actually could be more than just Bitcoin. But I think Bitcoin's different things for different people. I don't think that Bitcoin is the hedging asset. We haven't seen it perform. It's not inversely correlated to the S&P yet. I mean, we've actually seen certain days where the S&P and Bitcoin are performing very similarly, and Bitcoin appears to be risk on. But I think that people are starting to look at crypto as more of a risk off asset. I think people don't really know where to put their money right now. And with the absurd inflation that we're going to see, with the political uncertainty and the mess that is Donald Trump versus Joe Biden, with everything that's going on in the world, this code created by this anonymous person 10 years ago, that's built this massive community, seems to be a very attractive place for people to start allocating their capital. And I think, the biggest testament to why Bitcoin has succeeded and why people are investing is the community, is the fact that there are doofuses like me who will wear Bitcoin pants, right? And people like you who will wear a moon costume, right?
Oh, yeah.
It's because it's the community, right? I mean, Bitcoin has, I think people, when Jamie Dimon came out in 2017 and said Bitcoin was a scam, and actually the CEO of PayPal came out like 3 years ago and said Bitcoin is a scam. And I think what people have seen over the last 3 years is this, one, I think there are a lot of institutions that have really led the way here, right? Fidelity came in super early. They led the way. There have been a lot of traditional hedge funds that people don't know are actively been trading crypto since 2015, 2016. They're more market making and quantitative, but there have been a lot of, it's been a series of iterations, right? And iterative improvements to institutional infrastructure, but also companies moving into the market that I think has kind of set up the perfect storm for this adoption. I mean, people have seen, there's so much talent in this space. There's so many people moving into this space. I mean, even to the point of like State Street has run test pilots with Gemini for custody, and Gemini is using NASDAQ Smart's matching system. And ICE made this giant investment in Bakkt, and Bakkt's volumes are up to like 100 million a day. They were nothing. Everybody was making fun of it, but they've started to grow, right? And so I think it's just, it's a lot of things building on top of each other, and people now seeing that this industry looks a lot more sustainable than it did in the past. And just a final point there is just from a regulatory point of view, we're receiving a lot of clarity here, right? In that, Bitcoin and Ethereum seem to be fine. We see the CFTC coming out and, the guy who's running it saying he's super impressed with ETH. Like, I think there's a lot less concerns about regulation. I think the market is significantly less manipulated than it was before. We now know, that it's actually easier to track illicit transactions on a blockchain than it is to track fiat moving, right? It's much easier to track a criminal trying to launder Bitcoin. So I think, people have started to see, hey, there's actually something real here. There's a big community. There's institutional support. Regulation is not as much of a risk as it was anymore. And oh, by the way, this, the world is fucking burning. And I think that's a perfect storm for Bitcoin and crypto. And I mean, I'm not taking my money out of Bitcoin anytime soon.
You're not taking your money out of Bitcoin, so you're holding.
If it goes up to 20 grand tomorrow, I'm still in. So
you're still in. I think that what you just said is a huge theme, the concept of like, first they laugh at you, then we win type of thing, because
right.
what you just said, like PayPal, there's a number of occurrences where institutions, they laughed at it, they made fun of it, and now literally they are using these protocols and
we
tools
all did,
to
though.
hedge
I did too. When I first heard about Bitcoin, I'm like, what the fuck is this online scam? I mean, my first experience with Bitcoin was my friends in high school back in 2012 buying stuff on the Silk Road. Like that was the first time, like they were just buying drugs on the internet. Like that's how I came to know about Bitcoin. I'm like, I don't want to have anything to do with this. Right. And that's kind of how it got started for a lot of people.
So what do you think is different, and what do you think is the same as far as looking at the data and what actually moves the price? Because you brought up community earlier, and I think that's a huge part of it, because things like Twitter and YouTube, these are where people are getting onboarded into, but it doesn't really happen in traditional finance. Or do you think it does? Like, do people learn and get involved in the similar way? Like,
If
what makes
more
it so different?
Look, just think about this. This is the easiest example. On your phone, do you want a blue text bubble from a friend or a green text bubble from a friend? You want the blue text bubble, right?
Yeah.
You want the iPhone, and that's a community, right? They've built and engaged a community. There are people that will go, and I'm sure you've done it, or at least know a lot of people that have. You watch the Apple development events, right? And Apple's built up fanboys, and it's the same thing, right? It's community is everything, and that's the reason certain protocols are going to succeed and other protocols are not. At the end of the day, it doesn't matter who has the best technology, though that's obviously a part of it, but it matters how many people are behind it, how many people support it. Bitcoin doesn't have the best tech. I think that's pretty widely accepted, that the Bitcoin blockchain isn't the best. It's not the most scalable. It's not the fastest. Transactions take 15 minutes. It's not the cheapest, but it's the one that has the most support, right? And I think the same thing goes with ETH. The reason ETH has done significantly better than anybody else is because people are building DeFi on ETH, right? ETH Denver attracts thousands of developers, right? There's a massive community of supporters of people building on top of Ethereum. So to your point on what actually moves the market. So yeah, I think that in terms of community, that's more of a long-term thing, right? Like community is not going to drive the price of Bitcoin up 7% today or down 7% tomorrow, right? But it's news and events and specific developments that occur in the industry that really lead this movement. So we actually set out with our partners, eToro, who we work very closely, which is why I gave them a little shout out earlier, and basically explored the question of what actually moves the prices of cryptocurrencies, right? What is behind all of these short-term movements? So I know you know this, but one of the key things that the TIE offers is this platform called SigDev. And basically what SigDev does is it goes out and it crawls thousands of sources on the internet, in effectively real time. It parses through SEC filings, regulatory rulings, court cases, updates from publications in China, from exchanges, from token issuers, et cetera. And basically what it's trying to do is recreate what are can be thought of as like corporate actions in the equity world, right? Like, trying to identify things that are similar to dividends and stock splits and stock buybacks. So an example is like a hard fork is kind of like a dividend, right? You started with one asset, now you have two, right? A token burn is I'm using kind of loosely, but kind of like a stock buyback. And so basically what our system does, it pulls in information from thousands of sources in real time, and then it's able to categorize it and say, for example, this is a partnership between these two tokens. This is M&A activity. This is a listing. Like, you could say, show me every listing on Coinbase in real time, or show me every regulatory ruling against, XRP. And so we built up this database of tens of thousands of data points. And we're like, okay, now that we have all this information, what actually is moving the prices, right? Now that we've built up this history. And so we just released this, quarterly report with eToro. We do it every quarter. If you just Google crypto quarterly report, I think it shows up first. But you can search for the TIE eToro quarterly. So I'm going to walk through a little bit, on what actually moves the prices of cryptocurrencies, what some of our key findings are, and definitely feel free to interject. I know I could talk a lot, so ask questions, bug me.
Yeah, go ahead. I wanna, yeah, I'm very curious to see what actually moves the prices of this market, or what are we all doing daily in this market, and how new people can sort of get in. So yeah, go ahead.
Right. And so the first question we ask is which SIG devs or what significant developments move the market most over 24 hours, right? If you're a day trader, what moves the market the most? And we know this, right? It's announcements of staking, it's announcements of listings, and it's partnerships. We've seen that time and time again. With partnership, for example, when Chainlink partnered with Google Cloud a bunch of years ago, Chainlink went up by like 100 and some ridiculous percentage in like a day, right? And staking announcements and exchange listings all move the price up. But on the other hand, 51% of attacks don't, which is understandable. They're hacks. Token burns I found very interesting. You'd think inherently that, hey, token burns would increase the price of an asset because with a token burn, basically what you're doing is you're locking up a certain amount of the supply, which can never be accessed again. So it's a deflationary process on the coin. But we've seen in the short term, there's not really a price impact of that deflation. But just because something moves the price in the short term doesn't mean it's sustainable. And we've seen this so many times with partnerships and exchange listings, right? Where a company gets listed on an exchange, right? Or a token gets listed on exchange, we see the price go boom and then boom, right? It goes straight up and straight down. And so this on your left here is what an average announcement or an average partnership would look like, right? Same thing like Atari partners with Litecoin or some other random company partners with the crypto. What you see is this massive initial spike, and then 3 days later the price is back down to where it was before. Whereas on the other hand, there are a few different types of events that seem to be a lot more sustainable. The main one is mergers and acquisitions, and I'm going to go over an example of that later. But for example, when a token acquires a company, or when an exchange acquires a company that brings new users to its token, funding makes sense, right? We saw, for example, Audius today, which launched their mainnet, received 1.3 million from Binance Labs. Audius token is up like 900% today. Maybe it's down since then, but it was ridiculous. Audius launched their mainnet. They got listed. They got listed on Binance, and they took an investment from Binance. The token's up like 900% today. And then also mainnet launched their upgrades. It makes sense, right? When you're moving from your test net, like your testing environment, to actually a mainnet like Audius did today, it's good because they kind of fit three of these things here. That tends to be kind of a more sustainable thing. But my next question was, we've seen so many exchange listings pump the price or move the price of tokens up by 100%, 50%, 200%. Why does it happen certain times and not other times? And the answer is, it happens when a token is not previously been listed on an exchange with a large number of users and now is available to that user base. So for example, if you decided to spin up your own exchange and you listed Bitcoin, I'm sorry, but nobody would care. Bitcoin's already available on, the Cash App. It's available on eToro. It's available on Robinhood. It's available on Coinbase. It's available anywhere else. But in the case of certain assets like Aragon, within one day, Aragon went from being listed on almost no exchanges to being listed on OKEX, Huobi, and Binance. And the price of Aragon went up by 180% within the day. It actually crashed down to below that pre-listing value now, a couple months later. But the point being that if you're able to get in on this information very early and very fast, there's a huge amount of opportunity on the upside. But likewise, there's also a huge amount of opportunity on the downside, because if you can time the top right, you can also short these things. But I think the thing to note here, which is important, is this is not much different than the equity market. And we've seen this time and time again. For example, with Palantir, having its initial public offering, the price of Palantir skyrocketed. The reason that happens, just like the case of exchange listings, is when you're opening an asset up to a ton of new users and a ton of new potential customers, that's expanding your TAM, your total addressable market, right, of investors. And so by being able to open up a token to a larger number of users, inevitably, there are more people that can buy it. There are more people that want to get in. The price is going to go up. And as I mentioned to you earlier with Bitcoin, here's an example on the other side of things, right, where the price didn't go up at all. And in fact, it actually went down within 24 hours. This was Bitcoin Cash listing on crypto.com. Like Bitcoin Cash was already on Coinbase, was already on Binance, was already on all the large exchanges. So when it listed on crypto.com, there's no new potential users that don't already have access to it. And if there are, it's only a few. There's going to be no price impact. So the next question we had is, okay, so great, you showed us this chart, but what is actually the probability that any of these SIG devs will result in price increases? And the most fascinating one to me is that we've seen 90% of the time, a week after M&A activity, there's upwards price movement surrounding a coin. 60% of the time for funding, there's upwards price movement. But the thing that was most guaranteed, which was interesting, was token burns. So I mentioned that there wasn't a significant impact in price of token burns, but 100% of the time over a day, the price of a token will increase following a burn, but only 50% of the time after a week will it increase. So again, it's not a very sustainable thing. You see a spike, but only 50% of the time the price is actually increasing. And the one that makes the most sense, the easiest, is 51% attacks. So with 51% attacks, after a week, only 20% of the time does the price go up. After a week, which makes sense. You get hacked, your price should go down. And so how much can you expect the price to change? So in the case of M&A, it's actually wild. It's 8.2%. So, and I'll show you an example of that in a second. Funding about 4%. Listings also going up. Staking's up, and the biggest down one is 51% attacks. The token you're holding gets 51% attack, and you can get out. The general rule of thumb is get out because you don't want to be in that asset. And so, I alluded to this earlier. The biggest thing is M&A activity is hot, and we see this with FTX acquiring Blockfolio. So FTX, which is one of the most up and coming crypto exchanges, acquired Blockfolio, which is a portfolio management application with over 1 million daily active users that spend over 15 minutes on the app every day, which is wild engagement. That's insane. And so now all of a sudden, FTX acquired Blockfolio. FTX is a token called FTT. And what FTX is, I assume, probably trying to do is bring all these Blockfolio users into FTX. And right, so holders of FTT, which is FTX's exchange token, were like, geez, I got to get in on this, right? Or this is great. And so FTT went up by 33% within that week. On the other hand, this is a 51% attack. This was like the third 51% attack in a month for Ethereum Classic. And I have the timestamps here. 23% was how much it went down over 7 days following the 51% attack. So,
wow. Let me ask you a quick question. Like in the traditional markets, the word of wisdom is like buy the rumor, sell the news. So would you say that applies to crypto as well, or is it more so when the news comes? Like, is that what actually kind of drives
100%.
that long-term sustain? So you think it's reverse?
No, it's totally buy the rumor, sell the news. So the reason M&A does the best is because there's not usually a rumor, right? It's usually breaking news. Nobody knew about the FTX thing. Nobody knew that was happening, right? I mean, sure, I'm sure there were some people that had inside information. Some of the founders, some of Sam's friends and some of the founder of Blockfolio's friends probably knew, but it wasn't widely known information. Funding, the same thing. That's new, right? That's when there's no rumor and it's just straight to news. But with some of these other things like mainnet launches or upgrades, like you'd think that when a token launches its mainnet, it should skyrocket. But on the contrary, like the average 1 day price change following a mainnet launch is just 1% upwards. Like it's not a big number, and over a week it's 3%, right? Because a lot of that is buy the rumor and sell the news, where people know that the mainnet launch is coming. The reason that this number isn't even lower is because we're also tracking upgrades to mainnets, right? When they go from mainnet V1 to V2 or V3, and that's not always known about. But a lot of the time we see with mainnet launches, for example, with Cardano Shelley, right? Everybody is buying Cardano going into this year, and then they have their Shelley fork, which is not a mainnet, but a fork, but everybody knew about it, and then Cardano went down, right? Because the market had already priced a lot of that in, and a lot of times speculators will get in on this information first. So if you think you have an edge because something 6 months before, but it was in Forbes and CoinDesk and Cointelegraph, you don't have an edge because everybody else has that information. So the next question we asked is, does it matter where this information comes from? As you mentioned earlier, Twitter is a really big piece of crypto. So does it matter if news breaks on Twitter or if it breaks in the news? And the answer, generally speaking, is we haven't found anything too interesting with the exception of airdrops and regulatory rulings. So with airdrops, we found that when that information breaks on social platforms like Twitter, there tends to be a lot larger increase in price. But going back to community and the point we brought up earlier, it makes sense, right? With an airdrop, when all of a sudden community has access to, when the community knows about this, and with an airdrop, basically what that means is, I'm a token issuer and I want to give 500 people one of my token, right? All of a sudden you're expanding your community. So when you're posting about that on Twitter and engaging more people and engaging your community, that's going to have a much bigger impact on price when it's just like, hey, I'm going to write about this on my blog and not tell anybody. And from a regulatory point of view, something that I found was interesting is that when regulation is broke in the news, it's the average price impact is still negative on average, but it tends to be a lot less negative than when it's broken on Twitter. And I think that's probably because people on Twitter like to share negative regulatory news as opposed to positive regulatory news, and that type of information, receives more engagement. So the next question that we asked was, does it matter how much Twitter engagement that you have following this news, or does it not matter at all? And what we found is there's actually a moderately strong linear relationship between Twitter activity and price change. So basically, the more tweets, this is an example with a listing, the more tweets that there are surrounding one of these events, the higher the average price impact is going to be. But one thing that we found, which was really interesting, is that tweets itself don't matter as much as sentiment does. And what we found is that there's an exponential relationship between sentiment and price change following specific events like a listing. So in the case of a listing, we found, so one of the things that the TIE does, to back up a second, is one of our core things is quantified investor sentiment, right? Where we're basically scoring, I'm not going to get into the whole thing, but we'll basically score from 0 to 100 how positive investors are about a particular asset in a given day. And so when investor sentiment is more than 2 standard deviations positive from the mean, when it's above 90 following a listing, the average price change is just exponentially higher than when sentiment isn't high. So just interesting to kind of see that exponential relationship. And so, the next question that, I think inevitably you probably would have, and a lot of people have,
like that was one of my questions I was about to ask you. It's like people who are getting into the crypto market, early investors, there's too many things, too many metrics to look at themselves. So like kind of maybe talk about what are some of the most useful things maybe even you use or you see people use the most, maybe just getting into investing at the beginning.
Yeah, so I think one of the more interesting things about this report, and you can go find this, it's free. You don't even have to put your email in. You just click the download link. Like, we're not collecting any of your information. It just you type in the TIE quarterly or crypto quarterly report. You'll see it. It says eToro on the TIE. What we tried to do here is really make it simple, like M&A, partnership, listing, staking. And in the report you can actually see we break down what all of those things mean. But that's a lot simpler. Like, you don't need to understand the technical nature of what all these blockchains do. I don't know them. Like, I couldn't tell you what the difference between EOS and Tron was. I have no idea, no clue, right? But that doesn't matter. You can still take advantage of opportunities in this market without knowing how they technically perform, right? I mean, for example, a lot of people invest in the S&P 500. I mean, you probably couldn't tell me what 98% of companies in the S&P 500 do, right? And that doesn't mean that you can invest in those companies, right? And that doesn't mean that, like, when a company announces a dividend, that's not a good investment. It's the same thing with the hard fork. A hard fork could be a good investment, right? And when a company goes out and acquires another company, you may not know technologically how that integration is going to occur, but you may see that there's a big opportunity here, right? And so I think the point that I'm trying to get across is that, hey, this isn't all that different from the equity market. The cool thing is, though, is that because crypto is such a smaller market, these movements are so much larger than they would be in the equity market, and they're more predictable. And because crypto doesn't have earnings, it doesn't have revenue, it doesn't have dividends, it doesn't function like equities do, these movements are a lot larger. And so, the main piece of advice that I have for people is keep an eye out for market moving information and kind of these different trends that we've started to see. And I think our research can be a useful reference for it. But the point that I really want to stress is that timing really, 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 really matters. If you're late, you're done, right? If you're 20 minutes late to an exchange listing, if you're 20 minutes late to a partnership, an announcement, you're too late. This market moves very, very, very fast. So timing matters. That said, there are opportunities to take advantage of bullish events on the downside, right? So a lot of times, something will happen, the price goes up like crazy, and then the price crashes because these events aren't sustainable. And if you can time that right, even if you're late to the initial news, you can still make money kind of on the follow-up as well. And you can make money on some of these longer term things like mainnet launches and upgrades. And, a lot of times these are buy the rumor, sell the news events. So what you'll see with the mainnet launch is, hey, the price goes way up. And then when the mainnet actually launches, it goes back down. But over time, those mainnet launches seem to be a bit more sustainable, right? So I think just kind of thinking through, and that none of this is investment advice. This is all historical data. Just because things like this have happened in the past does not mean it will happen in the future. But what we're seeing is some very, very predictable patterns. In terms of where can people find this information, I'm not trying to I am not trying to sell anybody at all here, but our core product is the fastest way in the market to stay on top of this information. We power the two biggest news companies in crypto. So anytime you see breaking news, we're connecting to the primary source of this information. So for example, we'll connect to FTX's blog, and the second they announce the acquisition, we'll have that information in our system. And so our customers can ingest that information. So to this point, our customers are all enterprises. They're large companies. We don't really do business with individuals, but we've partnered with a lot of companies and products that are coming in and launching soon, which will give individuals exposure to a lot of this data. After all, crypto is all about democratizing finance. And I think at the end of the day, it's only right that we make at least a portion of this information available to the public, which is the thing we're working on. But, us aside, being active on Twitter, reading the news, right, staying informed, and then using, I think this as a reference for, hey, I saw this type of event. What has kind of happened in the past, and how do I kind of foresee this, moving in the future as well?
Yeah, like one of the biggest questions that I always receive from people is like, what happened in 2017, right? It's like, why that big run up? I think some of the metrics that you discuss would probably explain that, whether it's more people discussing it at the Thanksgiving tables. It happened a couple of years ago. We're getting into the Thanksgiving timeframe soon, different things like that.
I mean, the funny thing is, if we did this research 3 years ago, you'd have very similar results, but instead of the average price impact being 3%, it would be like 300%, right? Because the market just moved so
it's small.
much.
It's smaller in comparison. Yeah, you're right.
And it's also more rational.
Traditional markets.
Well, the market has also just become so much more rational than it used to be, right? I mean,
you think it's more rational now?
Oh yeah. Oh yeah. Like undoubtedly, Dentacoin was worth $2 billion, $2 billion market cap,
yes.
right? I mean, there's so many examples of crap. I mean, BitConnect, right? Like there's,
oh yeah.
I mean, I could just go through the list of, I mean, like, I'm going to go into CoinMarketCap right now, and I'm gonna show you a couple examples.
And what I want to add here is that I think too many people get caught up in some of these things, because in the traditional markets, we have companies like that too that launch publicly and fail miserably, right? It's kind of the same thing. It definitely does happen. Let's take a look at
this is
Dentacoin.
Look at this. Look at this absurdity. So Dentacoin on December 30th was worth $180 million. On December 19th was worth $62 million. So in 11 days, it went from 62 to $180 million. Then it went all the way up on January 8th to $2 billion. And currently its market cap is $3 million with $140,000 in daily trading volume. And at its peak, it was trading at $50 billion a day in trading volume. Just to kind of, I mean, there's so many, I haven't even looked at this one since 2018, but this is one of the dumbest names I ever heard of. Einsteinium. I don't know if it's as bad. Look at this.
It sounds like a Halloween crypto character. Something.
It's not as bad. It's not as bad, but like, it was like $500 million, and now this thing is back at 10 million bucks, right? And it was probably some stupid piece of news. I mean, back in the day, John McAfee was getting paid like $300,000 or $400,000 or some absurd amount per tweet to shill a coin, which is why he's now in custody of the U.S. government and is going to jail. But I think the market was a lot more irrational back then. For example, when Jamie Dimon, came out and said that Bitcoin is a scam, the price of Bitcoin crashed by like 15 or 20% following that news, right? Jamie Dimon came out today and said Bitcoin is a scam. People would say, haha, like, sucks for you. I've made so much money. Like, screw you. And just, that's it. That's the end of it, right? Nobody cares, right? Or people will call him an idiot. Like, Peter Schiff is no longer talking. When's the last time you saw Peter Schiff put out anything negative?
It's been a while. I don't think he's talked since, I don't know what the price of Bitcoin is right now, but I think it's about 13K when we're speaking right now, maybe. It's pretty high.
Let's see. Yeah, 12.8.
Yeah, I want to kind of end things off. I want to ask you two questions. One question is what we're kind of asking everyone, but before that, I want to ask you if you can get into a little bit of your thoughts on control, because you talked a lot about how you work with institutions. There's institutional interest, but the way I see it, in the traditional markets, a lot of high players control a lot of the data as far as things like Bloomberg. I think you at the TIE, you're taking kind of a different approach where some of the data is widely available just because it's things like Bitcoin, you can get it. but you're kind of quantifying that and making it more available. Whereas I think in the traditional sense, what the big players like to do is hoard all the data so that they can make the profits. So that's one of my points that I think in this market, what excites me is that there's more data available if you can look at it and digest it. And I think there's more profit that people make. And then my
Well,
second,
the one, let me address
actually, go
that
ahead,
first
answer
before,
that.
yeah, before you confuse me
Go
with two
ahead.
questions. So one thing I will add is that the institutional market is also very small. So anybody who's just trying to hoard data and sell it to institutions is not making any money. We've seen that time and time and time again. There are so many institutional data companies that have gone out of business. So if you're just selling to institutions, you're losing money. So that's not a good value prop.
Why is that? Like, do they
Because
not
they're
care
tiny.
about do they not need
Well,
it, or
no,
how
no,
do
no,
they
no, they don't
go
have
about it?
money. They can't afford it. So the average crypto hedge
Hmm.
fund is somewhere between 5 and 10 million in assets under management, which in no traditional market would be considered an institution.
Right.
Right. And so let's say they have $5 million, right? Let's say they have $10 million. Let's be generous. Most hedge funds run on a 2 and 20 model, which means they take a 2% management fee, which means every year they'll take 2% of the assets under management, which is $10 million, right? Which means they're managing $10 million of other people's money. So they'll take 2% of that to run the company, which is $200,000, and they'll get 20% of the upside, which means if they go from 10 million to 20 million, they'll make $2 million, which is a nice return, right?
Mhm.
But if you're looking at having $200,000, well, you got to pay your staff, you got to pay your salaries, you got to pay for custody, you got to pay for trade execution. Like there's a lot of different fees that go into it. And so, if you want to pay for data, well, there's not going to be a huge amount left. I mean, our enterprise customers can pay us anywhere from, 15, 20, 30, 40, 50, $100,000 a year. And there are very, very few crypto funds that actually have that kind of money to afford it. And so that's one of the biggest challenges. The second being that a lot of institutions just don't care about altcoins, right? So maybe they care about Bitcoin data, but
Yeah.
institution, like maybe, for example, we send out an alert, a signal to our customers about, let me tell you what this is called. Hold up, I don't even remember what the hell it's called. Easy something. Some new token got listed on Binance yesterday, right? And we alerted our customers of this new listing on Binance. It's called EasyFi Network, and we alerted our customers the price went up by 120%. But this is and same thing. We alerted our customers of the Audius listing, and within 10 minutes it was up 60%.
Wow.
The challenge is, though, if you're an institution and you're trying to trade $4 or $5 million, you can't trade these smaller coins, right? And so it only makes sense to service some of this information to individuals. And so while our core business is certainly selling to enterprises and we sell to exchanges, and we sell to funds, and we sell to law firms, and we sell to publications and researchers and all these different types of businesses, we're starting to work a little bit more with companies that have distribution channels to kind of get our data out there, and people will see some of these platforms emerge where the everyday investor can get access to a lot of this information as well. So for us, it's partly a business decision because institutions just don't have that much money, but it's also I think there's, look, I'm libertarian, I'm in crypto because I believe in democratizing finance. I think, I've seen so much insider trading and crap in the equity market. It doesn't make any sense that the average person is getting screwed over. And so look, when we first launched the TIE, we had a 100% free to use platform for everybody. For individual investors, we found it hard to monetize, which is why we moved to an enterprise business. But I've always believed in, democratizing access to information.
Thanks for that, Josh. I want to ask you one last question that we've been asking everyone, which is, we're kind of nearing the end of the year and we have the Halloween theme. So what's one thing that you're still afraid of in the crypto market? It could be anything, like a fear that you have that maybe it'll take longer or we might not get there, something like that. What's one fear you have?
I mean, I'm giving you the worst answer ever, so I apologize. But regulators shutting off fiat on ramps is my biggest concern. It's always been my biggest concern. It's never changed, right? We saw BitMEX get closed, but if the SEC and the SEC, this would be the SEC, decides that they say, all right, you know what, Coinbase, no more U.S. customers, right? And all these other platforms, right? And then China comes out and they take a hard stance against, OKX and Huobi and Binance and all these different platforms, right? And all of a sudden, all the ways that people can bring US dollars into the system or shut off, even though Bitcoin is decentralized, if you're able to shut off the fiat on ramps, that's a huge risk. I don't think it's going to happen. I'm not as concerned as I once was about it. On the contrary, I'm like not really concerned at all. In terms of other things that kind of, quote unquote, spook me out.
Yeah.
I just really hope we don't see as many scams this time around. I think we will see another bull market. I just really hope people do the right thing, and people don't get taken advantage of, and that people. I hope that people's first investment in crypto is in Bitcoin and not in some random altcoin that we've never heard of before, that they get, kind of tricked into investing in. I think you got to start with Bitcoin and go down the rabbit hole yourself. And I just want people to have the proper education and tools and information at their disposal, so that they can, so that, your grandma, if she comes into this space, and your cousin and your aunt and your mom, are given opportunities to succeed, and not taken advantage of. And I think this market has matured a lot, but inevitably with anything, we saw this with DeFi, rugs get pulled and people have the wrong, their incentives aren't aligned. And I just want to make sure that as an industry, we're doing the right thing by our users, because if we want to go 100x, we need to do that.
Yeah, I think that's a great way to end things off. If you're new to the market, definitely check out the Ties report with eToro, so you're not on Twitter all day. Josh, thanks so much for coming back on our Reimagine series. Always good to talk to you, and see you making progress. You always have new updates, and of course, you have a bird's eye view of the market. Thank you for your time today. Again, I'm your host, Roshan. And I'll let you all tune back into Reimagine 2020. Thank you.
Thanks for having me.